All right, today I wanted to go over something with you guys and brought the whiteboard. I like to write stuff. Don't you guys like when I show you what I'm talking about instead of just talking about it? Good, good. I like to do that. So, our goal at Bell Capital right now, my next target is to pick up $300 million worth of real estate. 300, boom, boom, boom. I'm going to go buy $300 million worth of real estate. That's what we're going to be doing at Bell Capital. That is the target. We're running that. We're going to do that within the next 12 to 18 months. And I want you guys to hold me accountable to that. You're going to see it. Hopefully, you guys are a part of it. But I wanted to share something with you guys because a lot of people be like, dude, how are you going to do that? So I want to share with you how I work that out and how you guys too. I work it out with my team. I work it out with my lenders. I talk to my equity partners and things like that, the people who are partnering with me. If you're not, then you haven't had that conversation, but trust me, you should be a part of it. But this is the goal, right? So I'm going to share with you guys how to work this out, right? It doesn't matter the number. You're doing 30 million, you're doing 3 million, you're doing 300 million, you're doing 3 billion. It's the same because my goal for the company is not 300 million. This is a target. So here's what I do. I'm like, all right, so and I'm going to keep the number simple because this is what I do. All right. So I'm like, all right, this is roughly about 1,000 units. So now we're talking about great locations, great properties. I know that I can do this at, my minimum size target that we just changed just recently because of what's going on, the deals that we're seeing coming around are around about 200 units. So an average of 200 to 250 units is what we're looking for. But here's where we're at. So I know if we're going to pay roughly about $300 million for a combination of however many properties we're going to buy to get to 300 units, when I do my calculations, I'm thinking that we're going to end up raising about $100 million. This is what you're probably going to need. Just work through this math, keeping it simple. We're going to take $100 million and we're going to go buy $300 million worth of real estate that cash flows. That's the game. So when you're thinking through this math, you go, okay, Vic, cool, that's great. How are you guys going to do this over at Bell Capital, right? This is important to know. Number one is, for me, it's the commitment. You got a commitment. Like, I'm committed to go buy 1,000 units and to get up to $300,000 worth, $300 million worth of real estate. That could be 800 units. That could be 1,000 units, depending on the assets that we're going to get. But I know that I'm going to end up putting together about $100 million. Simple math. Dude, if you knew this in the beginning of your career, like if you're just an investor, you're not trying to buy deals or nothing, you got a great business, all you got to do is figure out like, hey, I just need to keep investing money with a guy like Vic or anybody like that to know that I would be a partner in $300 million worth of real estate. So first thing that I do, and I'm going to use my calculator so you guys get it, is one, I commit. I'm committed to that. So, and then I also need to commit to raising the money. And then the next question for me, once I commit, is okay, who's done that? Who's already bought $300 million worth of real estate? That's not a lot of, 1,000 units is not a lot of units, guys, period. It's just not, that's not my big goal. My goal is $50 billion worth of real estate. What I'm just talking about now. So who's done it? Recently, let's see, over the last couple of years in my market, we have Essex, we have Essex Trust. That's a big owner here. We have True America. Just giving you a couple, right? We have Avalon Bay, AVB. We have Equity Residential. Sorry, that's EQR. That's Sam Zell's company. Long live Sam Zell. So we have these guys. We got Property West. You get the picture. So the point is, someone's done it. Because once you make a commitment, then you kind of look around and say, okay, is it even possible? Like, has some other company done it? Because if some other company's done it, we can do it, period. They're going to name Bell Capital along with this group of people over time anyways. That's going to happen. We got, and then naturally we have the big boys, right? We got Blackstone, we got BlackRock, right? We got Starwood Capital, we got Graystar. The list goes on and on, right? So, yeah, Graystar. The list goes on and on. The point here is that it's possible. A lot of times people want to do something big, just like me. Like, I'm a big thinker. I don't do little stuff. I'm not going to do little stuff. I've been around the wrong network for a long time in my past life that talks me out of doing the things that I know that's up to my potential, and then I settle. It's helped me, but it is what it is, right? So once I figure out, hey, look, I'm committed to one, I'm committed. Two, it's possible. Three, I just need to work the math. Now I'm like, okay, cool. For number three, we're gonna put together $100 million. And I'll show you. Here's the things you need to do that. Number one, right away, you need a story. Just like I'm telling you guys, hey guys, I'm gonna go put together $300 million worth of real estate, 1,000 units are gonna be in great locations, great assets that are already cash flowing, and I want to partner with you guys. Now, the other part to that story is this: there's no shortage of money. When we're talking about raising money, how are we going to be doing this? When you need to tell a story to do this right after you've committed, there's no shortage of money on the planet. So this works like this: I can go to like a Goldman, I can go to an institution, I can go to Goldman, I can go to Blackstone. All these people will lend money. I can go to family office. I go to family office, or I can go to my friends on Instagram, Facebook. I can go to LinkedIn, I can go to YouTube, and we can get together. I can just not use these people. I can bypass these people because they're already wealthy. They already deal with the wealthy. They're feeding a wealth machine over and over and over again in the world. Now, if I go to my family, my friends, and my business buddies, and we collaborate, I go find the deals. I put the team together. I have the third-party property management. I already have the fund. We already have the structure. I already have everything in place. And you guys just get to invest and be a part of this $100 million. And we get cash flow. We get appreciation. We get the tax benefits. We do this. And then in the end, we get a double or we get a quadruple, whatever that is on the money that we had. This makes more sense to me. That's how you go and you raise the money, right? So if you're thinking through your own stuff, I mean, I'm just sharing with you what I do, right? Because that's the best way. If I work this out and I tell you guys how I'm going to do it, you guys, I mean, it definitely helps me because I'm able to break things down. But you're also able to see the truth for yourself and go, dude, I want to do that. Or, hey, sounds like a lot of work. I'll just invest with Victor and Bell Capital because I see that he has a vision. Now, this is going to happen over the next 12 to 18 months. It has to, because there's a huge correction in the market right now. It's already happened and it's unwinding. Right. We already know the Fed's going to lower rates coming up here soon, whether it's this year or the beginning of next year. And once that happens, the dam's going to begin to break. It's not going to save a lot of people like people think. It's going to force investors and people to kind of come back into the market and look, but pricing is not going to change. It's going to be the people who have dry powder ready to execute. And it's only going to be the big deal. It's going to be institutions that have to push. It's not going to be the little guy. That's why we have to all come together, right, as investors and put our money in, and we go after these big deals together as a group, as opposed to trying to do it on an individual basis. It doesn't work like that. So now, the other thing that I like to look at as it relates to telling that story, which I told you guys, hey, there's no shortage of money on the planet. I can go to institutions or I can go to my friends on Facebook, on social media, and in line, and we can all come together collectively and go do this because I got the resources and the relationships to grab these deals. So for me, next, what I always do, naturally, I like to tell people like, hey, here's how I work through the money. I'm like, look, in a simple way, let's say we all came together collectively, 100 of us all came in and we put in $1 million each. Now we have that. My goal for every deal that we look at out of these $300 million worth of deals, $300 million worth of real estate or the 1,000 units, my thought is this: we all come together, we convert our money into real estate, right? Now we're looking at this, all the deals that we're looking at, if we can earn 5% on our money over time, super happy with that. Guaranteed happy. So let's say we stayed in the deal, we got what was that, 5 million a year, 5 million a year on our money. And we stayed in the deals for 10 years. Let's say the next 1,000 units, we stayed in those deals for 10 years. We would have made $50 million. I'm just going to do that. We would have made $50 million. We'd have made 50% of our money back over 10 years. We'd have already got $50 million back. So that's where we'd be. Now, that's assuming that the rents on these 1,000 units haven't went up. Now, whenever I look at a deal, I'm always thinking, well, let's say on 1,000 units, let's just go with me on this one, right? Because this is how I work my deals out. This is how I work the money out. I'm good with getting 5% on my money. I'm good with getting 3% on my money. Unlike other people, because I'm committed to this. I'm committed to creating wealth over long periods of time in real estate. And we're talking about institutional quality real estate. We're not talking about this get rich quick real estate where we're flipping, we're going to paint, and there's time for that. But we're talking about parking money and not losing it. So That said, now when we get into like, we can't assume that over 10 years, this didn't go up. So we get this deal, we're at 5% return on our money, which is the income of the property, the rents. But let's just say now, sorry, I banged the mic. Now, when you take a look at what's happened historically with rents in multifamily properties, rents in this country continue to go up, man. You're going to see and hear the same story over and over again. That's how I raise money. That's how I show my deals because I'm not changing the strategy. Like it works. So when the rents go up, which they always have, rents in this country since 45, or we'll just go back the last 40 years, the last 44 decades have went up 8 to 9%. If you Google that, you'll see what I'm talking about. But when we look at a deal, let's just assume not 9%. Let's just assume the rents went up another 5%, right? No big deal. So that's good because now we know, hey, look, that's another $5 million, right? Over the top of this per year. Let's say we didn't get that for 10 years. Let's say we raised rents, but we didn't do it for, let's say we weren't able to catch her. We're going to cut it back. We only did it for 5 years instead of 10. Go here. So that's another what? $25 million that we made on our money in new income because we raised the rent on the property. So now we're at 25 million. Now we're at $75 million. We made $75 million on $100 million already. We're already at 75%, right? This we got for five out of the 10 years. This we held on for 10 years. Now later, and this is what I do, guys. This is why I know taking on that $300 million worth of real estate is going to be a good deal for people when we come on board and we all come together collectively for this $100 million of investors and partners in the deal. So next what will happen is, because we have to kind of calculate this, right? So let's say we won't, like on this deal, we have, so now we have what did we say? We have 50 million. That's from the 5%. We still got $100 million because that didn't go away. Just because it's in real estate, it's not lost. So we still got that. We started off there. We got 50 million. We got $25 million from the increased income. That's the new increased value. I mean, the new increased income on that, right? So we got 25. We got here, we're at $75 million. We still got 100 million, right? In here. And then later, if we come to market, like different strategies, but when we come to market and sell, we aren't going to sell unless we can at least double the $100 million that we got in. So we got to get $100 million back plus another. But for me, I won't turn around and just sell unless I think we're going to double that. So for me, I'm looking at it like this. If we can come here, we'll be at $200 million over and above. We got $100 million back right here. Plus we got 75 million. We'll just do it in right here. Boom. Dude, this is how the wealthy make their money, right? What is that? There's $375 million. So $100 million turned into $375 million over 10 years. This right here is how the wealthy get wealthy. This is only me with the plan to go in and buy $300 million worth of real estate. That's only 1,000 units. So if you think about it, if we were to all come together and invest that $100 million at the end of the cycle of what we're looking at over 10 years, and I know this will work. I believe in this. I can't guarantee it, but I know for a fact. All the deals that I've done multifamily, they tend to double and triple every 10 years. And if we were going to do that, and we know we're going to get great assets, great locations, institutional quality, we know that someone's going to come along and pay us double or triple what we had in those deals. Plus, while we waited, we captured $50 million plus another 25 million. So we made $75 million just in income, cash flow. That all got distributed equally to the investors while we sat and waited for this big pop. Now 200,000 while we get our $100 million back. Or better scenario, along the way, I refinance this, give all of my investors their money back. Boom. So now we have zero money in the deal while we still get cash flow, depreciation, and future appreciation. Because even though you don't have any more money in the deal, the way that we do our deals, we don't kick you out of the deal. You still own the same percentage you had when you were invested. We don't make this go away. Like other institutions, once they refinance and take you out, you're out of the deal. You're out before the good stuff happens. They just give you your money back plus whatever returns you had. That's not what we do. So this is another way. This is a refinance because I'm looking at this like, hey, I believe over the next I'm saying 10 years, but I believe in maybe 7 years. I personally think rates are going to be probably around 4.25 all over again. This will be the debt. This is what I believe right now, no matter what. So as the debt continues to go down, and as a matter of fact, I really believe because normally historically commercial interest rates work really close to about 4%, not 4.25. So if they get back down to 4, man, this number right here that I talked about that I know me and my investors are going to hit, we exit and we turn around and be like, I mean, naturally, we get our piece of that, right? Because it's a portion of the profit. We do an 80-20 split on the upside. But when we go circle back and there's $375 million on the table, I mean, they're not going to count our cash flow. But when they start taking a look at the value, we can go back and go, hey, guys, and I'm going to substantiate the new value based on the income of that property. And I'm like, hey, I think we can go back and we're going to pull out that money and I'm going to pay you guys back. We're going to stay in the deal, collect cash flow, still depreciate it. This money coming back to you is still a non-taxable event. It's a non-taxable event right here. And then we're still going to get cash flow, still going to pass depreciation because we'll still be kicking that can down the road and any future appreciation later down the line. This is how wealth is created. And that's why I want to do this with you guys, like I said in the beginning of this, because rather than me go, because they will do it. I can go to an institution or a bank or a financial company or some other type of private equity firm and go, hey guys, here's my plan. Great properties, great location. You guys put up the equity. I'm going to sign on the debt. We will partner in the deal. They'll do it all day, especially the quality assets that we're taking a look at. A-class properties, A locations, B-plus properties in A locations in San Diego, a top MSA in this country. They'll do it all day, but I want to do it with you guys. So the question was this, because I can get excited. You can tell I get excited about this, man. This is my thing. This isn't a business. This isn't stocks. This isn't any of that stuff. There's no guesswork in this. This isn't get rich quick. This is get rich for sure. But this is happening. We're going to go buy $300 million worth of real estate, about 1,000 units. We're not fluctuating the numbers. We're not boosting them and going all crazy and stuff like that. We just want to make sure we're buying cash flow assets for me and my investors to park our money and wait. If you're still trying to make money, you need to make money. This investment's not for you. It's an illiquid investment because we're all going to be like, hey, let's do what Equity Residential does. Let's do what Essex Trust, the Essex Trust Company does. True America. Let's go be Blackstone and BlackRock. Let's go buy the assets that they buy, and then later, put that portfolio together and then go do business with them. They're not going to do business with us right now because we're too small. They won't even buy 1,000 units. They need to buy 10,000 units at a time, 50,000 units at a time, 80,000 units at a time. This is where I'm going to go. This is what I've always wanted to do. I've known this ever since I was in my 20s. I said I wanted a big real estate company and I didn't know what I was doing. I didn't have any mentors. I didn't have anybody to point me in the right direction. I stopped studying people and I started studying the founders of companies like this. And I was like, what are these people doing? I started seeing the assets that they owned and they bought. And I was like, how'd they do this? Now that I know how to do it, and I set up Bell Capital to do it with you guys. Now, the fund that we have is an accredited only fund. You cannot invest unless you're accredited, meaning you make 200,000 or more a year, or you have $1 million net worth. Like that's the way you get into that. We'll do non-accredited or Reg A fund or something like that later, so we can have everybody invest alongside of us, alongside of the accredited too. But for now, if you're accredited, you're sitting on 100,000, $1 million, $2 million, $5 million, whatever that is for you, and you want to be a part of what we're going to be doing over the next year. This is the plan. Go buy the units. We're gonna probably raise about 100 million. I'm gonna raise more than $100 million. I'm just sharing with you how do you raise $100 million and what is it for? Number one, like I said, confirm it. One, committed. You got to make a commitment that you're going to do this. I made the commitment. I know you guys have been watching me. I'm here. I'm doing it. I've been raising money. I'm not going to stop. We are going to get these deals. Two, is somebody else doing it? Like, don't be the first person. You don't always have to be a pioneer. You could we will be a pioneer, but we aren't going to be first. The way that we do it will be pioneering, but other people have already bought the same assets. I'm not making this up. I'm just doing what other wealthy, successful investment firms do. All right. Next, I was like, hey, look, How are we going to do it? Next, number one thing, you need a story. What's the story? Rather than go to institutions and banks and all these other the bigger groups to be my partners, I'm going to go to you guys. It's just better. I mean, you guys are much friendlier. I can be myself. I can tell you guys what I'm going to do and go do it. I don't have a noose around my neck with bad partnerships. So if something goes wrong, they're breathing down our necks and they take away everything. I want to help you and your family create wealth, generational wealth for you guys by investing with us rather than have your money die in banks and retirement accounts, 401ks and IRAs. And then last but not least, how are we going to do this? How we work out the money? Hey, let's just hit 5% on our money, minimum. First, don't lose money. Next, put your money in a place where it's kicking out at least 5%. It may start off at 3 and 4 and start to build up. I'll go over those things in other videos, but I'll take 5% of my money all day. I'll take 2%, 3%. Other people say, well, I can get more. Great, go get more. But I want my money in real estate, something that's real, I can see, smell, and touch. And then I want to know, hey, is there any upside to that? Can we beat inflation? Right. And if we're just like, hey, look, let's just say our deals go up 3%. On the average, rentals in great locations go up anywhere from 8 to 9% a year. I'm not talking about the big boost we saw in, all over the world where properties are going up 20, 25% in a year. That's not real. That was a blip. What's real in this market, to me, in California, Hawaii, Texas, all the places that have some sustainability on the average, they range anywhere from 3 to 5%. That's the budget. That's where we're at. And I think 3% is actually better than 5%. And we're not talking about 5% static. We're talking about compounded over time. And last but not least, we won't sell until we can double or triple what we had in the deal on the way out. That's how we double and triple. That's how we win and create wealth. We park our money, we wait, and that money multiplies for us because we continue to push the deals forward. Now, hopefully that helps. Do I have something on the back of here? Oh, I do. Oh, yeah, my last piece. And I'm just kind of talking about the money. You refinance our money out. I've done that multiple times. All my investors, we go in, we refinance the money. I give it all back to them. We stay in the deal, hold on to the deal for cash flow. We still use the tax benefits of the asset because we still own it. So our net worth is continuing to go up as the value of that property continues to go up, even though we have no more money in the deal, which makes it an infinite return. And then when we sell for double or triple, and we move on down the road, or we refinance again and we keep that property until somebody comes in and I can rip their heads off, which is what I did with our last apartment building. We got 450% on our money. Crazy. But like I said, it's not impossible. This is the game, and I've been doing it. I'm just now able to do it at scale. But how do you raise $100 million? This is how, right? You need a deal. You need the deals. You need the plan. You need to know who's done it. You need to make sure that you're not first. And then you need a story and you need an audience to talk to those people who are qualified and who are interested in investing. Like, that's how you do this. That's how we're doing it. I want you to be a part of that. I know this video went a little long because I got excited. And if it's confusing, don't be confused. The whole part about this is if you're interested in investing, reach out to us. You can go to bell-capital.com. You can hit schedule a call. I will go over those things with you, or somebody on my team will go over them with you, whatever questions you have. We're not here to sell you anything. We're not here to convince you. Our job is to answer questions for you, help you walk through the paperwork, and then help you decide how much money you want to invest. Like, that's it. So I'm here for you if you need it. All right. Again, how do you raise $100 million? Boom, just like this. This is what you do. Whether you're raising 10 million, 5 million, $100,000, it's all the same, right? One, make a commitment. Two, who's done it. Three, who are you going to go to and why? And how are you going to help your investors multiply their money? That's what I've been talking about a lot. You got to learn how to multiply money. And multifamily real estate like this, that's how it has to be. You got to commit once and for all for the vehicle that you're fighting for. So, all right, have a great day today. Enjoy it. And let's talk soon. Let me know if you guys need anything. Oh, like this video, share this video, comment on this video, subscribe to the channel. We're looking to get more subscribers. I want to grow that. I cannot get to where I want to be without more people. I want to partner with you. I want to talk to you. I want to hear from you. I want you to be a part of my network, just like I want to be a part of yours. That's why I talk and I share with you guys the type of assets I'm looking for. The $300 million deal. The other deal that we looked at, hell, I looked at one deal just last week that hit the number. It was like $255 million. We talked to the brokers. We weren't a player on that deal, but that deal works. I have those relationships. We're already there. So this isn't going to be a hard thing to do. And I said that to say, get around people who are having those conversations. Stop thinking small. It's much easier to just be an investor than try to go get your own deals. You can invest with us. I trust me. Hopefully you trust me and you trust yourself too. That's a big thing. You got to invest to take care of your family. And you also want to expand your mindset. You will not get bigger thinking little. And you got to be around people who think bigger and are also exposed to bigger things in a bigger network like me. All right. So again, have a great day. Let's go.